Hello everyone, welcome to the third lecture of our Retail Banking Wealth Management revision series. So today we are going to revise the unit 3 of our module A, which is applicability of the retail banking concepts and the distinction between retail and corporate banking. So basically in this unit, two topics we need to cover. There are certain process models which are followed by banks. We need to cover those models, and then what is the differentiation, what is the meaning, what is the difference between retail banking and corporate banking. The first two units we have already covered. The videos are there on the YouTube channel. If you haven't yet seen them, make sure you watch them as well. All right, so let us start. When we talk about the process model, what process is used by the banks to provide the products and services to the customers? How do they deliver the product to the right customer at the right time? Right? So, there was a study conducted by the Boston Consulting Group on the processes that are utilized by the retail banks, and they categorized four process models. How the banks they implement their products, the information that they have across the various products. All right, so these are based on what? These are based on two things: the technology, how the technology is utilized, and the customer interface capabilities. Customer interface means customer information sharing. Customer information sharing. So two things you will come across. First, whether the product that is offered, that product is separate process model, a separate creation, delivery, reaching out is followed for each of the product, or do we use a common process for it? Similarly, customer information, for every product are we using different information, or do we have a database, a centralized database that is across all the products? So accordingly we have four models: the horizontally organized, vertically organized, predominantly vertical, and predominantly horizontal. Try to understand this in a form of scale. So we have a scale. On the two extremes, we have the horizontally organized and the vertically organized. So on the very extremes, on this side we have the horizontally organized model, and this side we have the vertically organized. In between we have the predominantly horizontal and predominantly vertical. Horizontal will be end to end processing, complete differentiation, complete separate process model for each of the product. That is horizontal. There's a flat structure. All the products are different. Vertically organized means there will be a centralized database that will be used across products. So the vertical model, it works in a top-down manner. Top-down. At the very top, there will be a person, then there will be persons under them, then there will be other persons under them. So it is a top-down model. In the horizontal, separate verticals are there, right? So the information is also kept separate in the horizontal. The information is shared in the vertical. Predominantly horizontal means for most of the products, end-to-end processing will be there, separate process models will be there, some common information. For example, the credit score will be common for all the types of loans, right? Predominantly vertical means for most of the products, common information will be there. For some of them, unique process will be followed. Uniquely, we will gather information. For example, if we are providing taxation services, will writing services, so these are individual personalized information. All right. Other than that, for most of the products, common information is there. So this is how the four models are classified. Now let us go through them. First, we have the horizontal or the vertical model. Both of them, they depend on the level of customer information available in a single platform in the database. Can we use the same information for offering the multiple products or services across assets, liabilities, or other services? or all these verticals are kept separately. Separate information, separate database is managed for the asset side, separate for the liability side, separate for the para banking. Accordingly, the horizontal model is where different process model for the different products is used, offering end-to-end solution. So this is the horizontal model, right? Assets, separate process model. Liabilities, separate process model for para banking services, separate for, let's say, wealth management services. So different process model for different products. Vertical, on the other hand, it provides functionality across product. There's a centralized customer database, and this database is used across the product. So if we look at the structure of the vertical model, it is somewhat like this. There is someone at the top, then there are people under them, then there are people under these people, like this. Similarly, one product information database is created and it is disseminated. Information is disseminated across all the products. So we will not create a separate database for asset, separate database for liability. No. A common information is there that will be used across the products. This is the differentiation between the two. Then we come to the models in between. Predominantly horizontal means it is mostly product oriented. For most of the products, separate process model is there with some common information. For some products, common information will be used. For example, let's say for the bank is providing will writing service. Will writing service. For this, separate process is followed, and for taxation also separate process is followed. Then for the types of loans. Now under all the types of loans, the product information will be shared. That is predominantly horizontal, right? So if the bank is offering 10 products, out of 10, 8 will be product oriented, separate process model. 2 of them can be for common information. Then predominantly vertical means for most of the products, common information is available, and for some, the separate process model will be used. For example, out of 10 products, for 8, common information is there and only 2 separate process models are followed. All right. So these are the 4 models which are used, and every time you will find question in the examination from this topic. Now we talk about which type of model is adopted by the banks. The public sector banks, they are traditional, they are product oriented. They go with the horizontally organized model. But in today's time, with the use of technology, with the use of data mining, data warehousing, common information is also used. So mostly they go with the predominantly horizontal model, right? The more technologically advanced banks will go with the predominantly vertical model. If we talk about the old private sector banks, the scenario is mixed. Some old banks, they use the horizontal, other they use the predominantly horizontal and the vertical. So it is mixed. But the new private banks, they generally follow a vertically organized model. Again, the public sector banks, they are traditional. They go with the flat structure. Private sector banks, they are more technologically advanced. They are more ready to adopt the new changes in the workings. So they will go with the vertically organized. The top-down model. Remember this term. Top-down is associated with vertically organized, and flat structure is associated with the horizontal. If we talk about the foreign banks, it is also predominantly vertical, right? The retail banking initiatives are attended with common customer information across the products. This is how the 4 models work. Similarly, in the technology also, the 4 models can be adopted. Are we using the same technology? Are we using separate technology for the separate products? Right? Other than that, in this unit, you are given some assets and some liability products, how the pricing is done, how the technology works, in-house outsourcing. all of which are covered in the further units. All right. Then we come to the difference between retail and corporate banking, which is also important. So, retail banking, what is the target audience? It is individual segment. Corporate banking deals with the corporate clients. In the individual segment, we will have the mass market. We will also have the affluent class. Then retail banking is a mass market banking. Corporate banking looks at the smaller segment. The general public, they go for their banking services to the retail bank. Corporate clients, they require larger amount of quantum of loan. Their current accounts transactions will be more. So they go with the corporate banking. Retail banking is a business to customer approach. Bank is a business providing services to the customer. Corporate banking is a B2B approach. Bank is a business, they are providing services to other corporate persons, other businesses. The ticket size of loan is low. Why? Because most of these loans are personal loans. So, education loan, car loan, home loan, these are small quantum. Ticket size is high in corporate loans. Why? Because they want to set up a business, they want to start a new venture, they want to invest. So, there the ticket size will be more. Risk is also more widespread. Why? Because the number of customers in the retail banking is more. The customer base is large. So the risk will be widespread. In corporate banking, the risk will be more because the ticket size is big, right? So if on the retail side, the customers are defaulting, it won't lead to much loss because the ticket size is low. But on the corporate side, even one corporate debtor, they default, it will lead to huge losses. Returns will be more in the retail banking because the spreads are more, but in corporate banking the returns are low because the corporates can bargain. In the retail banking, the bank has an upper edge. The customers, they are largely fragmented, they will not be able to bargain, so they will have to accept whatever rates that the banks are giving. But in the corporate side, the returns will be low. Why? Because the customers are less and they can bargain for a lower rate. So returns will be more in retail banking, returns will be less in corporate banking. Monitoring and recovering, however, becomes more laborious in the retail banking because the large customer base is there as compared to corporate banking. In the liability side also, the cost of deposit is very less in the retail banking. Why? Because the ticket size of deposit is less. The transactions are also small value. But in corporate banking, the ticket size of deposits will be large. The cost of deposits will also be high. The cost of maintaining the deposits will also be high due to pressure from the corporates for higher rates. And finally, if we are talking about the impact of NPA, because the ticket size is more in the corporate side, so the impact of NPA will also be more in corporate banking as compared to the retail banking. Why? Because the retail banking has lower ticket size of loans as compared to corporate banking. All right, so these are the differences. We can also say these are the advantages of retail banking over corporate banking. All right, so remember the classification: ticket size, cost of deposit, returns, impact of NPA, what is more in the retail side, what is more in the corporate side. This is the distinction between the two types. And that is all. These are the important topics from our unit 3 of our module A. So do remember those 4 models. Every time questions are asked, and also remember the distinction between retail banking and corporate banking. These can be asked in fact based, these can be asked in multiple statement. Like which of the following are true about the difference between retail banking and corporate banking. So many statements will be given. One statement, the institute will confuse you by saying that the impact of NPA will be more in retail banking. So no, you will have to remember which statements are correct about the distinction. So that is all for today. Next session, in the next class, we'll be starting with the 4th unit of module A, which is branch profitability. make sure that you watch all of these videos on a regular basis. So for that, so that you get the notification, subscribe to the Oliveboard JAIIB CAIIB English Medium channel. Like the video, share the video, comment down below, and I will see you in the next session. So thank you so much, all the best, and have a great day.